How inflation destroys retirement savings and what to do. Your $500,000 retirement nest egg? In 20 years, it might only buy what $300,000 buys today. And most people have absolutely no idea this is happening. Hey, I'm breaking down exactly how inflation eats your retirement alive. And more importantly, the 3 moves you need to make right now to protect yourself. Because waiting? That's the most expensive thing you can do. Part 1. The Inflation Killer. Let's be real about what's happening. In 2014, a dozen eggs cost about $2. Today, $3.50, sometimes $4 in major cities. Your morning coffee went from $3 to $6. A gallon of gas? From $3 to $4. These aren't small changes. They're wealth destruction in real time. Here's the math that keeps financial advisors up at night. The average inflation rate over the last 100 years is about 3% annually. Doesn't sound scary, right? Wrong. Watch what happens. If you have $500,000 sitting in retirement accounts earning 1% in a savings account, and inflation runs at 3%, you're losing 2% of your buying power every single year. That means in 10 years, your $500,000 is only worth about $410,000 in today's dollars. In 20 years, you're down to $335,000. Let that sink in. You did nothing wrong. You saved. You were responsible. And inflation just deleted $165,000 from your actual wealth. Most Americans don't understand that inflation isn't theoretical. It's not something economists argue about on CNBC. It's literally happening to your money right now. Today, while you watch this video. The worst part? If you're in a traditional 401k earning 6% returns while inflation runs at 4%, you're only getting 2% real growth. You feel like you're winning. Your account balance goes up, but your purchasing power is barely moving. Part 2. The 3 moves that actually work. Move 1. Get into inflation-protected assets. Period. Open an account at Fidelity or Vanguard today if you don't have one. Look for I-bonds. That's Treasury inflation-protected bonds. Right now they're paying over 5% and they adjust for inflation. You can buy up to $10,000 a year. That's a real safe move. No stock market risk. You get paid to wait. Then look at tips. Treasury inflation-protected securities. These literally adjust their principal based on inflation. If inflation runs hot, your bond gets more valuable. The Fed can't argue with you. The math works. But here's the real move. Move 2. Max out your Roth IRA with growth assets. A Roth IRA at Fidelity or Robinhood lets you put $7,000 a year in completely tax-free growth. Not tax-deferred. Tax-free. Forever. And you can invest it in the S&P 500 index fund. Historically, the S&P 500 returns about 10% annually. Inflation at 3%? You're getting 7% real growth. Over 20 years. That's the difference between $196,000 and $380,000. Inflation doesn't destroy S&P 500 growth because companies raise prices and maintain margins. You own those companies in the index fund. This is non-negotiable. If your employer offers a 401k match, take it first. That's free money. Then max your Roth if you can. That's how you actually beat inflation. Move 3. Diversify outside the dollar. Real estate, precious metals, international stocks. These aren't fringe moves. They're survival moves. Real estate typically appreciates with inflation because housing prices rise. Gold has historically maintained purchasing power during inflationary periods. Add 10 to 15% of your portfolio to international index funds through Vanguard or Fidelity. When the dollar weakens from inflation, these assets gain value. You're not betting against America. You're hedging inflation risk. Part 3. Your actual timeline. If you're 30 right now and start maxing a Roth at $7,000 annually with S&P 500 growth, by retirement you'll have roughly $1.2 million. But here's what matters. That money actually buys things because you beat inflation. If you do nothing, your savings are getting wrecked every single year. That's not being pessimistic. That's being awake. The move. This week. Open a Fidelity or Vanguard account if you don't have one. This month. Buy 10,000 in I bonds. This year. Max your Roth IRA with an S&P 500 index fund. That's it. 3 moves. That's how you stop inflation from stealing your retirement. Your future self will thank you for taking action today. If this breakdown helped you, hit that subscribe button right now. We're breaking down personal finance in plain English every single week. You've got this. End.